Morning, Steve Free in Chicago with the morning grain comments. A little bit surprised today that prices are lower. We've got corn down about a penny, wheat down 2, and beans down 2. Yesterday, the USDA actually lowered their ratings of the U.S. corn and soybean crop. I thought that might offer some support to the marketplace, but it appears like when you look at the headlines, the chance of a U.S. and China trade deal might be diminishing. First of all, the trade delegation from China might leave a day earlier than expected. And then secondly, there may be some issues with U.S. limiting some participation by Chinese in our U.S. equity markets. And so I think those things could actually put a damper on the fact that we might get a trade deal. And I think that is more important to the commodity and equity markets than right now what our crop size is. Tuesday is always a day in which we have a lot of data to absorb from the previous night. The U.S. soybean exports for the fourth quarter were record high. Corn exports, though, are 6-year lows. And so you see a big difference between the demand for the beans in an unseasonable time of the year by China especially, and the fact that there is no export demand in corn. Corn FOB traders say that we really, from a price perspective, are not competitive until March of 2020, which could hurt corn export demand. U.S. corn mature 58% versus 85 average. Harvest is 15 versus 27 average, and the crop was rated 56% good to excellent versus 68 a year ago. So the market is expecting USDA to at least lower the carry-in, maybe the carry-out, and we'll see what they say as far as production on Thursday. Soybean dropping leads 72% versus 87 average. Harvest is 14 versus 34 average. U.S. soybeans rated 53% good to excellent versus 55 last week. The other thing that we have to be watching for is this winter storm that's moving across the northern third of the country this week. Some people look at 650 million bushels of beans grown in North Dakota, South Dakota, and Minnesota, 2.3 billion bushels of corn. There is some concern that the heavy snow and blistery winds could reduce those crop numbers there, as very little of the crops in those 3 states have been harvested to date. Winter wheat planting is 52% done, and we get some rains in the eastern part of the southern plains that's helping conditions there, but the western areas remain dry. Spring wheat harvest 91% done. Normally the harvest is done, so that 9% could be suspect in quality and quantity if this heavy winter storm blankets the spring wheat area. This is also true for Canada. Brazilian farmers have about 3% of their soybean crop planted to date. Usually about 9 to 10% is done. Some of the delay has to do with some dryness in Brazil. Again, we talked about the winter storm moving across. The 11 to 16-day U.S. forecast calls for average precip and temps. So we'll kind of see if we are allowed to get some harvest done with that type of forecast. South American weather, scattered showers in Argentina and southern Brazil. The 6 to 10-day outlook calls for rains falling in most of Argentina and southern Brazil, but things could remain dry in the northern areas. Managed funds yesterday were buyers of corn, sold some meal, and bought some oil. Going into the report, going into the harvest season, going into the end of the year, we estimate the funds are short 25,000 wheat, 130 corn, and about even in the beans. So we have one private crop estimate out there. He continues to look at the corn crop at 13 billion bushels versus the government's 13.8. He also looks at the bean crop at around 3.5 versus the government's 3.6. So, I mean, those would possibly be game changers if true, and probably would push prices in the beans over the 920 area and in corn over the 390 area. So a lot of unknowns as far as the crop production, as far as Washington policy, and as far as trade, which keeps the market volatile. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.